Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the podcast, host Craig Jeffery sits down with Drew Emrich and Julia McAllister, Executive Directors of J.P. Morgan, to discuss seismic shifts in the healthcare industry. They dive into a range of topics including healthcare consumerism, shifts in care delivery models, growing adoption of data analytics and artificial intelligence, and more. Listen in to this dynamic conversation.
The opinions we're sharing today are our personal opinions and views and may or may not represent the opinions of J.P. Morgan.
Julie and Drew, welcome to the Treasury Update podcast.
Thank you, Craig. Pleasure to be here.
Thanks, Craig. It's awesome to be here. Thank you.
So I'm excited about today's focus. It's on healthcare. We're going to cover and touch on some of these topics as we had planned on consumerism in healthcare, shifts in care delivery models, and then finally, we'll look at data analytics and AI. So we have a whole bunch of sections. So in the show notes, you can see where these different sections start. But let's begin by talking about, what do we mean by seismic activity? Before we get into consumerism and healthcare, what's referred to, when you think of something that's seismic, it's a big deal. What are some of the big deals in healthcare? And Julie, maybe you could start us off.
Sure, Craig. Excellent question, and thank you. And it's interesting when you follow all the different industry conversations that you hear the word seismic and seismic shifts being used quite a bit recently. And I think naturally when we think of seismic, we tend to think in some major collision of tectonic plates, a catastrophic event, something with, high magnitude earthquake and big loud boom.
A lot of shaking.
A lot of shaking, exactly. But actually, seismic activity can also be smaller earth vibrations that happen over time, over a long period of time, and ultimately will cause a major shift in a less disruptive way, if you will. So when you think of seismic shifts in healthcare specifically, there are three particular themes that come to my mind. First, it's consumerism. It's how patients apply their experiences that they learn from other industries onto their interaction with healthcare. And to me, those have been those smaller vibrations that have been happening over a long period of time, and we're seeing some major shifts in healthcare because of consumerism. The second one is actually shifts in care delivery models and subsequently reimbursement models. And there we have seen combination of changes that happen more suddenly, like a major earthquake, as well as those smaller sustained vibrations over time. And those shifts are shift to ambulatory care, our shift in focus to preventive care and wellness. It is moving from fee-for-service to value-based care and patient-centered care, as well as explosion of telehealth that, of course, happened as a result of the pandemic. And a third one, it's the exponential growth and adoption of data analytics and AI across all the facets of care delivery, from clinical to financial to operational. And again, to me, it's a combination of explosive events as well as those sustained vibrations. Think of blockchain. Think of AI, RPA, machine learning. Think of our adoption within healthcare of ERPs and EMRs. Those are big enterprise systems. Think of use of APIs, and arguably that is currently exploding. Our use of data and analytics, specifically in precision medicine and personalized medicine, moved from structured to unstructured data and overall use of predictive analytics. So basically, data, analytics, and AI are helping us shift from mere benchmarking to actually supporting the data in our decisions about care delivery models. We can probably think of few more topics, but those three I think are very key topics. They're top of mind from a lot of healthcare professionals today.
Yeah, those are definitely three pretty big themes. The middle one especially, I'm really interested to hear. This idea of telehealth being impacted by people not going to the doctors directly. It's like the house visit with your internet connection. But it seems like there's a lot of things that are changing beyond just telehealth in that area. Those are really, really good themes, and thanks for structuring that. And maybe we'll just jump over to Drew now. As you've heard these themes, and I know you and Julia talk regularly about healthcare and what's changing. Maybe you can talk about, maybe bring it down a level from these major themes, these tectonic or seismic shifts, down to maybe tactics or operational things, or what are some of the other elements of change that you're seeing?
Without making this another podcast about a pandemic or the forbidden word of COVID here, right? It certainly did bring about some major shifts in the healthcare environment. I think one of the biggest things it exposed was how reliant on paper and kind of analog processes the healthcare world is, both from what we call payers to the insurance companies, providers, who are those who render the care, and even the pharma, med device, med surg type environment. So there's just a lot of paper in the system. And when you had an event like we had in 2020, what ultimately happened is you saw so many situations where these manual processes became almost impossible to do. I think one of the best examples...
Because of remote? Because people being remote, or just, okay.
Yeah, I think there was a lot of remote work. There was processes that were requiring people to be in an office. And so they didn't have either the infrastructure for their employees to do the work anywhere but the office. So there was a mad rush to go buy laptops and to buy webcams and to buy all of that stuff. You think about one of my favorite examples is check print outsourcing. This is something we've been talking about for 10 plus years with clients. Banks have never had so many check print outsourcing requests in our lives. This ballooned off the shelves because suddenly nobody wanted to send their employees to the office. Another example I had with clients quite frequently was, hey, we collect credit cards, but we only collect them over the phone using a point of sale terminal that sits in our office. Well, when people sent their employees home, they weren't going to give them that point of sale terminal, A, because they only had one of them or two of them. So how do you decide who gets it? And B, it's a PCI compliance risk to send that home. And so they sat locked up in an office with nobody there. And suddenly this client had no ability to take a payment at all. They had never thought through that in their business continuity planning. And so we ended up setting up a number of virtual gateways really, really quickly. But the challenge with that is that still takes 6 to 8 weeks to do with no customization generally. And you've got 6 to 8 weeks where you're not collecting money. And that's a huge hit on treasury orgs in a catastrophic period of time where you're needing cash flow. We talked about the telehealth shift. That was both a delivery of care shift and how that care is rendered. But if you think about it, you generally interact with a patient in person. And so part of that is taking a payment in person. You often collect those copays. And so suddenly healthcare organizations had to figure out, how am I going to collect a payment? Do I collect it pre-care, point of care somehow? Do I only get to now collect post-care? And once you go post-care, the likelihood of collecting that money is significantly drops. And so that was a whole concept, as well as how you bill for that. You had to train physicians with how to actually code those transactions, because if you look at some of the CMS coding rules, certain little triggers of maybe camera on versus camera off will trigger whether or not you get paid. Did the person have good Wi-Fi or did they have bad Wi-Fi? Could they even turn it on? They tried to, but do you get to collect money on that? So there's this kind of shift of delivery of care, as well as do you even get to get paid for that? I think the final thing there would just be, we saw a huge shift in vendors or suppliers actually asking for virtual card payments. So it's something that in the past, the payer, in this case, our clients, the hospitals, et cetera, we're always trying to push this out to their suppliers. Hey, we want to pay you with a virtual card. And so really here we saw a big shift in saying, hey, we need money quick, however you can get it to us. And we'd prefer it not be paper, because that means somebody has to go to an office. That means it has to be some other manual process. And so we saw a big shift towards digital payments, be it virtual card, ACH, et cetera.
we do a lot of surveys and capture information across all industries, not just healthcare. And during, really the first year of COVID, it seemed, based on our statistics, that the normal amount of conversion from these paper or manual processes to digitized processes or automated processes seemed like we got about 2 to 3 years worth of normal conversion happened in 1 year. And I know it varied by industry and type. How does that square with what you saw during this time?
Yeah, I would say that certainly. I don't have the numbers behind me to back it up, but I would certainly say that is statistically around what we would have seen as well. It's just this rapid impetus for change. And what we saw was inklings of certain activities starting to happen suddenly launched into happening real time. It was budgets were suddenly approved where they had been stagnated for years in many cases.
And I know this isn't really in the exact vein of what we're talking about today, but do you think that, and either of you guys can jump in, do you think that's a pull forward of just the conversion activity that would happen over 2 or 3 years? Or do you think everything is slid forward too? Is it just, is there, are we going to see a drop off, and, when will the reversion to the mean happen? Has it accelerated the adoption rate?
Craig, I don't think the reversion will happen. I think what's going to happen is maybe some normalization, that we swung so far in one direction and so quickly that perhaps, we kind of will bounce back a little bit, but I think these trends will certainly sustain, because if you really look across all the industries, including healthcare, digitization, move to paperless, contactless payments, we now have gotten the taste of that, and I think going back is not going to be feasible.
Yeah. Certainly not going back. I'm just wondering, is the rate of adoption going to start to decline in terms of, instead of this percentage, did we just borrow from a couple of years, which is awesome. And that's one thing I'm interested in seeing. What's going to happen? Did we increase the rate towards electronic permanently to close that gap and to get rid of it?
Yeah, I would only just add, I think that one of the major themes we're talking about here is consumerism. And I think that consumerism across healthcare, but across all industries, has radically changed to a instant gratification culture. And I think that spans every industry now. And I think that's part of this acceleration that we're seeing. I think to Julia's point, we might see what happened, I think at the very beginning, was lots of technology was bought to solve for a specific need. I think the technological advancements, a lot of what we'll see in the next few years, is optimizing all of the practices and all of the processes and all of the technology that we bought over the last 18, 24 months. I think a lot of that will be right-sized into more streamlined sets of services versus maybe some hodgepodge kind of technology that was bought to meet an instantaneous need.
Are we speeding things up? Are we removing friction? What is automation? Is it both of those? Is it some of those? But that can be a little bit more too broad of a question. But maybe I'll turn back to Julia. You had started off with consumerism in healthcare. Maybe a few more specifics or examples of where consumer experiences in one area bleeds over, particularly with healthcare. What are you seeing? What are some key takeaways in this industry?
That's an excellent question, Craig. I think it's practically impossible to pinpoint exactly where consumerism in healthcare started. But I will answer your question by looking at it through the lens of my own professional experience, because I have seen consumerism gain a prominent spot in conversations and in our approaches to care delivery throughout clinical, financial, and operational facets of care delivery. So I think we all remember mid to late 90s, right? Most of us do. And you remember internet became a major source for information. We started searching for online. Consumers were very hungry for information that could be found on the internet. And so providers, actually, as an example, providers leveraged that trend and offered consumer health libraries on their websites, because what they wanted to do is to offer information on symptoms, health conditions, and procedures perhaps either prescribed by a physician or contemplated by a consumer to make available. There were tools like search engine optimization and search engine marketing available that allowed those providers not only offer consumers information online, but also leverage those tools to connect consumers searching for information to service lines, to their centers of excellence, to their physicians, and ultimately drive appointments. And that became a patient acquisition tool. As a matter of fact, back in those days, I worked with one of my clients, that healthcare system in the Northeast, who was a thought leader at the time and actually leveraged that very approach to patient acquisition. And they were able to track over $6 million in revenue directly related to online searches, which was fascinating.
And that was a decent percentage of their overall revenue, or just
they were large, but it was a substantial enough to be noticed and to actually make conclusions that there's actually something more in there. Because the narrative back in the day was that the patients must be informed of their treatment, and they also need to be able to shop for healthcare, very much like consumers started to shop online for airline tickets, for hotel reservations, for TVs, appliances, and even a pair of socks. And the more data we collected on consumer healthcare consumption patterns and preferences and behaviors, the more we connected that data to outcomes and demographics, the more the data itself became or started to inform decisions around service line marketing, decisions around strategic planning, clinical decision support, as well as population health. And so care quality, price transparency, and access to care claimed quite a prominent spot in amongst policymakers, providers, and payers alike. And the decade that followed, the early 2000 to 2010, actually resulted in a number of legislation that was introduced in healthcare as a result of consumerism. There was patient activation measures that were introduced that not only measured individuals' ability to understand their own health, but also their ability to navigate the healthcare system. We introduced Triple Aim that really connected patient outcomes to patient experiences and cost of care. We also introduced Meaningful Use that actually became a catalyst for not only EMR adoption, but patient portal adoption, which at the time was merely considered a patient communication tool, but now has become a major vehicle for patient payments. And let's not forget that actually high deductible health plans were introduced right around that time. They gained more prominence with the Affordable Care Act in 2014, and today high deductible health plans really represent the major type of commercial insurance available. And so the factors that continuing to drive consumerism in healthcare are, of course, technology advancements. We'll learn from other industries. It is patient-centric communication tools. It is also change in benefit designs, price transparency rules. There are a lot of conversations about that currently. We all wear our wearable devices, right? So the patient-generated health data is now a big factor in healthcare. And of course, we already talked about telehealth. Telehealth too is propelling a lot of changes related to consumerism in healthcare.
I have a bit of a side question on that. As you were talking through the changes and the advertising, it always seemed like if people aren't paying for something directly, like it's covered by their health insurance, they're like, whatever it is ordered, it's fine. I don't pay for it. I'm not going to shop for it. And, higher deductibles is having an impact. And your point that 29% of total covered workers have patients as payer, Is that the biggest issue, or is it also people are becoming more informed, to search for these things? Is that the biggest issue right there, the high deductible health plan, where people have their money in the game really close to the transaction?
It is certainly a catalyst, and one of the major catalysts. But I think it really is a compound effect of the fact that, yes, if you really think about it, my grandmother never questioned the decision that her doctor made and the treatment that the doctor prescribed. With adoption of internet and just as a consumers embracing this culture of verifying information, looking for second opinion, asking our peers potentially and our friends for their experiences, that certainly accelerated our ability to make sure that we assess what we're about to, in type of care we're about to engage, but then also the fact that consumers essentially became a payer of healthcare. The laws of supply and demand started applying within healthcare a lot more prominently than they were before, because Craig, to your point, consumers only paid anywhere from 2 to 3%. And now it's as much as 30%. So that makes a big difference.
More skin in the game. Yeah. That's really helpful. Just the broader education on those shifts. And you've given us I guess I would say about a 20-year history of where we've come from. And so as you look at where are we today, where is that important as we look forward? Is there anything to add on that we should be thinking about, or healthcare providers should be thinking about?
Sure. Understanding where we came from certainly helps us better understand where we are today and why we're here today. And actually today, the way we define healthcare consumerism is a personal choice and responsibility in paying for. And I underscore that to your question about, consumers now becoming payers, or our conversation on that. A responsibility in paying for and managing one's own health. So if you really look at the healthcare ecosystem today, consumer is squarely in the middle of it and drives a lot of decisions around care delivery models, as well as payment models. So let me give you a couple of points or thoughts to ponder on. So how I perceive expectations of my experiences with healthcare influences where and how I seek care. How convenient it is for me to access care, whether it's online scheduling or hours of operation, or perhaps proximity, distance to my house or work, influences where and if I seek care, and actually in what modality. Am I going to go to a retail clinic, urgent care, virtual care, what have you? How engaged I am in my treatment or medication regimen, how well I understand it, influences both clinical outcomes as well as have direct impact on provider reimbursement, because there are penalties for readmission rates, and the levels of utilization in the value-based care, which is capitated risk-sharing model, really matters and impacts reimbursement directly. How well I understand my health insurance benefits influences actually where I seek care, whether I seek care at all, and how well prepared I am to pay for care, and actually how well informed I am of my financial expectation pre-care, and how well I understand my bill post-care also influences the speed and the cost of the collections. We started talking about this particular metric or statistic maybe 5-6 years ago, and interestingly enough, in the recent Instamed survey, which I believe we will offer as part of the materials for the podcast. So the survey found that 25% of Americans are still struggling to pay a $400 plus bill. And half of those consumers will need to set up a payment plan. So how well not only I understand my financial responsibility, but also how well the provider understands not only my propensity to pay, but also my preferences for payment, also impacts cost and speed of collection. Because think about it, what if I am trained by other industries to have already discarded my checkbook? Or what if I'm a millennial who actually never procured a checkbook in the first place? So, and expect a full digital experience to our earlier conversation. So we certainly need to be aware of that. And lastly, I will add that my overall experiences in healthcare, which actually encompass clinical, facilities, cafeteria, and my financial experiences, influences how I'm going to rate providers in the HCAP surveys, which are not only required by CMS, but also have a direct impact on reimbursement. And again, interestingly enough, that very Instamed survey that I mentioned indicated that 56% of consumers were willing to change providers just for the better financial experience. So in my mind, those are quite compelling examples to your question, Craig, that consumerism is a major driving force in care delivery and reimbursement. It is a top priority not only for healthcare industry, but also in C-suite conversations. And as a matter of fact, many healthcare providers have already created chief experience officer roles to address that very topic.
Chief experience officer, that sounds great. I appreciate you stepping through the expectations about where and how, and then some of those statistics are they're a bit concerning. A quarter of Americans will have a problem with a $400 bill, and then I guess 1/8 of us will need a payment plan. Really interesting, data points there on the personal side of what we do with healthcare. Drew, I want to bring you back into it. As you think about providers, how are they going to meet these new expectations of consumers, whether it's for where you get care, how you get care, the financial experience in influencing, 5 out of 9 people. What should we be thinking about there? What should hospital systems, healthcare providers be leveraging?
Yeah, I think that's really going to come down to a technology and infrastructure investment that they've made. So I think on the previous podcast a year or so ago, we talked a lot about these macro level EMRs or patient accounting software. So these big time systems that can now do both the kind of medical records that are electronic as well as the accounting portion behind that. Right, these are coming together, and there's these huge kind of players that are in the market. Our providers are spending tons of money on these systems. And I think a long-term trend that we've seen is that healthcare has grown through acquisition. And so you have a lot of disparate systems out there. A given provider might have 3 or 4 of these, or they might even have more in some cases, not to mention their ERP systems or their treasury workstation. So they have this massive ecosystem of technology that's out there. And now they have to make all of those systems effectively talk to each other. And then to our conversation earlier, they just went out and bought a whole other slew of technology to go digital all of a sudden in a 18-month span without necessarily looking at the full end-to-end picture of how all of these data sources, all of these technologies interact with each other. I think a couple of statistics that we were looking at, 82% of consumers want all of their healthcare payments in one place. They want to be able to get a bill from anyone and pay it in one place. You think about, I had a medical event about 7 or 8 years ago, and I was in a hospital setting for 10 days. I got bills from 7 different providers during that stay. The hospital radiology, the independent radiologist, the anesthesiologist, the surgeon, the house doctor, the ED, the hospital. And what made it even better was they switched patient accounting softwares while I was in. So I got 14 different bills for 2 different parts of my stay on the front and the back end, right? And I had to call every single one every single month to make my payment for my payment plan. It was horrible. And so as I started to look for that, I probably would choose a different location if I had the opportunity to, from a payment experience in the future, right? So I think it's that they want to be able to pay it in one place. They want to get bills electronically. I think one of the amazing things we think about is that, there's this aging population that goes to hospitals and they're old and don't do technology, yet you look at who is really around these days, there's tons of technology. Grandparents have FaceTime with their kids, or, they have cell phones for work, and, people are digital by nature now. And that, even I think the stat we saw was 75% of all consumers actually want e-statements, yet I think 50 or so percent can't get access to those statements electronically. That's a big miss between what consumers are wanting and what consumers are offered necessarily. And, as you've made these huge investments in these technologies, these hospitals have, millions of dollars in these events, right? These are 6, 12-month projects, 24-month projects, depending upon the, system's size. What was interesting is a lot of these EMR systems originally started building some more around the clinical side, and the clinicians and physicians love them, and some more around the revenue cycle side, which is the billing and collecting. And the revenue cycle side loves them, and the other sides don't necessarily love the respective other softwares out there. But none of them really built around a client-centric model. And they all have client-facing portals, and they all have client-facing engagement opportunities. But what we're seeing is that there's this onslaught of private equity and angel investment into these healthcare financial technology companies who are acutely focused on consumerism. And how does your specific consumer experience really get lifted to the next level by XYZ technology? And so we see a lot of hospitals buying these types of products now, and it's taking them out of these EMRs, it's taking the patient experience out of those EMRs, and it's starting to create these little silos of experience around the kind of patient engagement, from scheduling to point of care to payment after. And so now we're seeing these EMRs start to really invest a ton of money really quickly in building these consumer-centric tools to kind of match what they're seeing in the marketplace.
So on this move more towards the consumer experience, are we losing anything on the rev cycle, or even on the clinical workflow cycle, or are those being more seamlessly being pulled together so that consumer experience is at the center, but the other ones are not like a patchwork quilt to add it on? It's not some Frankenstein system, is it? Yeah. What are you seeing there?
I would say that the big systems that are out there are really wanting to make sure that those client and patient experiences are solid, are either building the tech themselves or are opening up their APIs to be able to integrate seamlessly from the front end of a given patient experience to the back end. So it might not be that specific software that's providing that quality of experience, but they're certainly allowing that to come into their ecosystem, if you will, a lot more readily than they had been in the past. And I think both from these fintechs cover everything from coding and from adjudication of claims to pre-claim submission scrubbing to make sure that you're not submitting incorrect claims and delaying your revenue by another 30, 60 days because you submitted the wrong claim code. So everything from that to actual payment processing to HIPAA and PHI form signing on a digital environment, things of that nature. And so there's literally hundreds of these out there. And so I think that's one of the big challenges we see right now is hospitals are faced with, well, if there's literally hundreds of these out there, how do I pick the right ones? How do I know if they work together or not? And to your point, do you lose something when you start engaging with these? And I think the answer is, in many cases, yes. So if you haven't made the right kind of organizational shifts to make decisions, then we really do see clients creating kind of a cumbersome both staff and patient experience, because the staff has to work with all of the technology that you've acquired, right? And so, for me, I see a couple of things that are really important around kind of making decisions on what technology to buy, what partners to partner with, and things of that nature. So
it sounded like you gave us a little bit of a hint about that with, APIs, more of the, we talk about open treasury, open banking. I'm wondering if you're going to talk about open healthcare, but I guess part of that, meeting these needs with hundreds of options. Any cheat codes that you would offer to people to help make those decisions, getting to the right partners?
Yeah. I think this starts with making sure that the whole organization is on board with the digital strategy. You have these new chief experience officer roles. You also have new chief, information technology officers have taken a front of line role in determining how the organization is going to work. Historically, you've seen healthcare organizations work in major silos. Revenue cycle made decisions they wanted to make. Treasury made decisions they wanted to make. Accounting made decisions they wanted to make. And nothing really kind of came together. And where I see clients being really, really successful are the ones that have group accountability. If revenue cycle is talking about a project with someone, then they have brought in the other parts of the organization. If treasury is talking about a product with someone, that they're bringing in all of the other parts of the organization. And I had an example not too long ago where, a revenue cycle team had decided to go with a certain product, and they, had gotten to the contracting phase. They had even signed the contract. And then they came to the treasurer and said, hey, I need you to go open a new bank account, and I need you to set up new merchant processing IDs with a provider you've never worked with before. And needless to say, he was a little, irked. And, it was a challenge because, they had met a need that they needed, but it wasn't going to fit into the overall experience of the patient. It didn't even accommodate for, patient refunds, which is a huge problem. And so it was going to actually move him backwards from digital patient refunds back on the credit card to now he was going to have to issue checks for any payment that was taken in this way. So as I think about it, it's wanting to make sure that everybody in the organization sees the full chain of custody of a transaction from, the point of transaction to the, end of it essentially, and fully understands that each and every technology partner that you bring in along the way could have an impact and create friction in that environment. I think the other big theme that I see is technology is rapidly changing, and if Julia's company has a product or a feature that I think is really slick, I'll probably go develop one myself that's pretty similar to meet the same need. And so one of the things I would encourage providers to do is really ensure that when you're starting to talk about a new theme or a new feature or something like that, make sure you're reaching out to your existing vendor base, your existing supplier base to say, hey, do you have something that would do this? Because the chances are, if they do, it will be a lot more seamless for you, both for your patients as well as your staff.
Interesting. I mean, I think part of the conversation you had this description of like this straight, end-to-end view, a comprehensive view to make the best solutions. And then when you talked about APIs earlier, I thought that was going to be the best of breed in fitting together. But you're saying, hey, the core ecosystem, if they have one, they've integrated with it, that might be a better fit because it's part of the same family of services.
Yeah, and I think it's probably both and, right? I think that there's components where your current provider can probably do something just as easily as another, potentially. And then there might be a situation where another provider can easily plug in and would have enhanced feature functionality that nobody else is going to build. And so I think there's a constant kind of tug and pull against, is it right to kind of plug in, or is it right to kind of go with an existing integrated solution? But I think that the API allows for that more holistically now, but I think there's still that ability to maximize your existing vendor relationships being a good first step to explore.
Yeah, some good points there to think about. Thanks for that. Julia, I want to shift a little bit to some of these macroeconomic themes. Some of the disruptions are external. All of a sudden we have people talking about supply chain who never talked about supply chain in their lives. It's like it was one thing when we ran out of toilet paper. Now it's like where's the meat in the grocery store, and we can't buy certain laptops. Like whole sections are sold out. There is massive disruption in supply chain. Labor shortages seem particularly acute in food service industries and other areas. How have these types of shifts, supply chain, labor shortages, other items, how is that impacting this arena of healthcare?
Absolutely. And supply chain conversations and importance of supply chain within the healthcare industry, those conversations have persisted for a very, very long time. The pandemic certainly accelerated our awareness of supply chain and, more importantly, our awareness of the need for supply chain resiliency. And actually, what Drew was mentioning in his comments just a moment ago really tie into the underlying infrastructure that's needed for supporting shifts in care delivery models, either due to consumerism or due to pandemic or whatever the factors that you can think of. And the infrastructure that's really needed to support care delivery, I think telehealth is probably the most obvious example. But in reality, we have been experiencing sites of care shifts for quite some time. Earlier I mentioned, shift from inpatient to ambulatory, from acute to non-acute, post-acute to retail, home health, virtual care, what have you. So shifts in care delivery like this really tie very closely to care utilization and actually have implications related to facilities. It's the size, the capacity, the location, the hours of operation. They have implications on staffing, both clinical and non-clinical, and staff compensation. It naturally, the infrastructure and processes and technology that's needed to support them, and the investments that we're making in sort of the major technology purchases, as well as partnerships with fintechs or other technology providers that fill a particular gap or address a certain need. We talked about reimbursement a little bit earlier. So it's from, as Drew just pointed out, how to correctly bill for a telehealth visit, or, the level of utilizations, how they really impact utilization and reimbursement in the risk-sharing capitated type models. There are also long-term implications related to population health. COVID aside, with this shift to ambulatory, we must start asking ourselves a question: are healthier populations shifting their healthcare consumption to ambulatory, and hospitals potentially will see sicker patients with longer length of stay, and hence there will be implication on infrastructure, people, processes, technology utilization.
Has that been happening during COVID?
Oh, during COVID, absolutely. During COVID, there was another phenomenon. What we saw is our health system being stressed, overloaded with COVID cases. But on the flip side, there was underutilization as it relates to elective care, chronic care, and elective procedures and things like that. So longer term implications, I think, have we really seen all of the effects from underutilization? We were saying, what happened to heart attacks and appendicitis during COVID? Where did they go? Exactly. Yeah. Where did they go, right? So what will be the further impact on care delivery models as we move forward? And so I think as we come out of the pandemic, we must consider these long-term implications, and basically what people, processes, and technology needs we will have to support, and how resilient and nimble we must be should another disruptive event to occur. So all of this more broadly categorized as capacity management. And it's actually a fascinating topic, personally fascinating to me, and I think we can have another, really, really long conversation because it has so many implications around infrastructure, labor, supply chain. Capacity management is a critically important concept to overall ability to scale up or scale down, actually, to meet care utilization demands in the most effective and efficient manner. So, Craig, to your point about supply chain is a big factor in capacity management. And we talked a few moments ago that we're all became acutely aware of supply chain. We actually, I think, admitted to ourselves, realize may or may not be the right term, we admitted to ourselves that supply chain is much broader than mere procurement. And that elevated supply chain conversations from hospital basements to the C-suite. So supply chain took on a role of truly a strategic discipline. And I'll give you another stat to ponder. Supply chain expenses actually represent anywhere from 15 to 40% of a typical hospital operating budget. Such a spread is because of, depending on the case mix index or supply chain maturity of that facility, as well as adoption best practices. And it is actually the second largest spend behind labor. So as we think about care utilization, delivery model, and really implication for supply chain, effective supply chain management strategies are extremely important because ultimately it will help us to improve speed and accuracy of reimbursements. It will help us realize savings. It will enable us to deliver care where care is actually needed and wanted by consumers, as we have discussed earlier. And also, when we're thinking about supply chain resiliency, we must understand the interdependencies within supply chain between different suppliers and supplies themselves. And, if we cannot procure supplies or a particular item, it doesn't matter how good of a term we negotiated or how good of a price we negotiated, because it all becomes moot points. So here comes the concept of supplier segmentation and strategic sourcing, and it must apply not only to high dollar ticket items, but also to low dollar suppliers. I'll give you a couple of examples. At the onset of COVID, when we had an unprecedented demand for ventilators, did you know that actually those ventilator patients required a cocktail of 13 different drugs? So that had implications on drug distribution. The N95 masks for providers were actually fitted with saccharin, a very, very fine sugar. So at some point that created also, a shortage or perceived shortage of that. Something as simple as blue masking tapes, as the elective part of healthcare started to reopen after COVID, that became in high demand, and there was a temporary shortage of it because we needed a lot of blue tape to mask off, our social distancing squares where to stand. So when we think about strategic sourcing and supplier segmentation, we must consider, as Drew had pointed out in a different context, that full chain of custody of supplies. So strategic sourcing, supplier segmentation, and supply chain finance are actually critically important element of not only supply chain discipline itself, but this overall concept of capacity management. And I'll also answer your question about labor. So I mentioned that, supply chain costs were the second highest. The first highest is, of course, labor, right? And pre-pandemic, labor costs represented about 60% of operating budgets. It'd be interesting to see what they are today. Well, maybe it's the same proportion because the cost of supplies themselves have increased. And also because of the labor shortages and subsequently rising labor costs, we see yet another impetus for finding additional operational efficiencies and cost savings. And the way we can accomplish those, not necessarily but asking our suppliers to reduce their price, because the supply chain shortages are happening to suppliers themselves as well as to healthcare. But we really must leverage innovation, technology, automation. We talked about RPA, machine learning, AI, and there are use cases in rev cycle, also use cases in supply chain as well. It's the whole move to digital in payables and receivables, reducing paper and digitization. I said that without stumbling. Try to say that 5 times.
No,
exactly.
I won't.
So really, finance and treasury are becoming important key partners within the whole healthcare ecosystem.
Yeah, that's good. So there's a number of things I learned there, but if there is a increased shortage on the blue tape, I'm blaming you and this podcast for that. Yeah, you don't think about it. I don't think that was anybody's business continuity plan. Make sure you have enough blue tape to mark off spaces. But yeah, thank you for those points. And this is a podcast on the healthcare industry vertical. Our podcast channel is heavily geared towards Treasury. It's a Treasury Update podcast. So, Drew, maybe I can ask you to bring back the links where they may not have been as obvious to the Treasury organization. How does Treasury in healthcare organizations, how should they think about this? How does this create some adaptations, both for them, but also for others who think about how one of these areas impacts someone else, like in Treasury, in maybe a hospital system, for example?
If you wanted to boil down what Julia said, costs are skyrocketing while revenues are plunging. And if you're sitting in the Treasury office, that's always a scary place to be, right?
You see it earlier.
And so, obviously a lot of the hospitals got some stimulus money, which helped them, weather the storm, which was fantastic for the industry as a whole. But in general, costs were skyrocketing, whether it be the cost of goods or the cost of labor. And at the same time, you see this shift towards reimbursement models being driven down. You saw underutilization of care going down. And so how do you deal with that? Well, you really have to have effective cash management policies, procedures, practices. You have to have the right systems and technology in place to automate. It comes to a point where you really need to be able to do things in an automated and efficient way without having to hire more people to do things manually. And so that might be, again, your Treasury infrastructure. What are you investing in from a technology perspective? What's your Treasury workstation? What's your ERP system? Does it have capacity to do some of these various functions in an automated fashion that are otherwise manual right now? I think the word or the theme that I would, this is really 2 words, but is working capital. That was suddenly a buzzword that came. It's always been a theme for banks to talk about. It suddenly became a theme that clients listened to and asked about. And so that's really about how do you maximize your days payable outstanding while minimizing your days sales outstanding, managing your inventory levels effectively, and all without disrupting the global supply chain as a whole. You have these healthcare organizations who are trying to provide care, and they're trying to manage, their supply base and making sure that they're not taking out a small supplier who they've hired for the last 20 years. And if they just to say, hey, we're not going to pay you for 90 days now, that's not a win for that supplier. They're going to go out of business. It might push the downstream manufacturer of a component or the raw material that downstream manufacturer bought. So how do you create kind of a win-win for the overall supply chain? And so what we saw a lot of clients really moving to was working capital management. So how do you drive essentially a win-win for everybody in the solution, which would be things like supply chain finance. We saw a lot of interest in that. We saw a lot of interest in dynamic discounting, a lot of interest, we mentioned it earlier as well, the virtual payables, so virtual cards, and how do you leverage extending your payment terms while maybe paying quicker or getting a discount of some sort. And what we found was cash in hand for many of these suppliers was a lot more valuable than a cost of goods sold, if you will. And so I would say effectively managing your day-to-day cash flows, your forecasting, and then using those data tools to effectively drive a solid working capital picture for you.
Yeah, it sounds like you said cash flow is king in a nuanced way for healthcare, which is good. Now, I did want to bring in some of the discussion around data analytics, AI. Both of you talked a little bit about that. What's going on with AI, machine learning, even RPA. What are some things you can get us up to date on with regard to that type of tech and data?
Yeah, I think this really fits well with the conversation we were just having, right? So how do you leverage technology to automate otherwise manual processes to reduce your cost, right? So you have to look for every little avenue you can find to automate processes that currently take your employees 3, 4, 5, 6 hours to do, a matter of seconds to do. And so that comes back to that whole decision of what vendors and what suppliers are you partnering with. So I would really break this down into a couple of areas for a treasury organization, kind of cash positioning, et cetera, and cash forecasting, and then kind of the reporting rules and things of that nature. So from a RPA perspective, so again, RPA is the robotic process automation. So that's simply an if-then statement. If you see this, then do that, and you're telling the machine to do that instead of a person. I see that really in a couple places. Driving daily cash worksheets. So how can you automate your daily cash positioning function using RPA? That can be done a lot of times through treasury workstations, through your ERP. A number of banks offer tools that do that sort of a thing for you as well. Another area we've seen on that as well is really around the GL posting. So how do you generate an automated GL posting file instead of having somebody sitting there manually doing journal entries on the accounting ledger, right? There are tools, again, within all of these infrastructures that technology infrastructures we've talked about, that allow you to automate if-then statements around posting those to the general ledger, creating those journal entries. So those are two areas I really have seen in the treasury world, RPA kind of take off, if you will. From a machine learning or AI, which is the trendy topic, if you will, I see this really in the world of cash forecasting. So, we've seen a lot of clients struggle for many, many years on cash forecasting. And so technology now is able to leverage kind of basic rules around your data. So looking at historical data, but then it's able to take that, learn from what your data has said, and create much more accurate and robust, meaningful forecasts for you. And then I think the last one there, I would just say, I've seen this over the last couple of years, is taking receivables and really making that a automated posting file from what I would call previously analog processes or paper-based processes. So whether you get an ACH payment, the data sometimes doesn't flow with the payment. And so you get an email, you get a picture, you get a spreadsheet or something. Somebody's still keying that in and manually gathering all that data. There are tools now that are out there that will either pick up the images or pick up data off the images, or it will pick up data from an attachment in an email, or it will look for the data in an email. And the systems are actually able to dynamically learn based on what they're seeing, how to accurately pick that up, so that each and every time it gets better and better and better at picking up the data in an accurate way. So if you were at 80% auto posting at the beginning, maybe after some of these weeks of learning, it's going to actually be at 85, 90, 95% auto posting rate. And that saves a tremendous amount of time when you think about your staff time and being more efficient and hopefully lowering your costs. So those are some of the areas I see that kind of AI, robotics, if you will, in the treasury world. And then the use cases and revenue cycle for that side of the healthcare world is, I would honestly say, is endless. I mean, that's where you see a lot of the fintechs coming in to do technology, data digging, and things of that nature.
Yeah, more analytics. Yeah, I think we just started scratching the surface on tech, and thanks for your comments in there. Let's move to wrap up. I've really been enjoying what both of you have been saying, but we'll start with you on the wrap up, Drew, and then we'll start and then finish with you, Julia, on that. So maybe just final thoughts or any key takeaways that we should be thinking about in healthcare.
Yeah, I would say just kind of going with this trend of seismic shifts, right? I mean, earthquakes can't be prevented. You can't control them. You don't get to decide when they hit. But what you can do is prepare for them. And you can build an infrastructure. You think about buildings that have the ability to withstand a humongous earthquake, right? So the idea that I would encourage, healthcare companies to be looking at is how do you create a technological infrastructure that is both strong and flexible. It's future-proofed to an extent that you can withstand something of magnitude that we just kind of experienced. I like the idea of, I'm a sports guy, so bend, don't break is what you always heard on defense. So how do you build a resilient organization that has the ability to withstand something that you didn't expect? And so I think it's having that kind of group think mentality that everybody in the organization is on the same page, rowing the boat in the same direction, that they're all on the boat, not some people in different boats all over the lake, right? And so I think those are really the themes that I would have, is just making sure that the organization has got a single direction you're headed, and that direction is for technological advancement, and that isn't just fixed in a concrete pillar, but it really is flexible and able to adapt as the world changes, because it's going to continue to change.
Very nice. Julia, your final thoughts.
First of all, I agree with the points that Drew made. They were absolutely on point. So to perhaps add or maybe underscore some of those concepts and pieces of advice that Drew shared, healthcare is very, very complex, and it has always operated on thin margins. And I'm sorry to keep bringing up COVID, but COVID devastated those margins, and we're recovering from it, but we're not quite all the way there. So as Treasury professionals, we really must be aware of the complexities and shifts happening in healthcare, and not only be aware of what is happening, but really understand the underlying causes and drivers behind the shifts, because they actually have a direct impact on the financial health of healthcare organizations. We talked about consumerism at the beginning of the podcast, and the reality is that consumerism does have major impact on care delivery model and on reimbursement, and it is here to stay. So payers and providers alike must really understand their consumer, meet them where they're at, and really understand their preferences of not only engaging with the healthcare industry overall, but also their preferences financially, how they're willing to pay for healthcare, because as we talked a little bit earlier, quite a bit of payments actually coming directly from consumers' pocket. We talked about data and analytics, and Drew gave some excellent examples of, how automation, AI, machine learning, RPA can really free up valuable staff time and introduce savings. And the reality is that we'll probably experience labor shortages for quite some time, and I'm not suggesting that we will build an algorithm to replace a nurse. That's not going to happen. But what we can do by leveraging technology in other areas and automating some of the mundane tasks, we can find savings that we can ultimately apply to, where we need to expand more on labor, on clinical staff, as well as free up our staff in other areas to perhaps to do more kind of meaningful from mundane, more decisioning and revenue generating activities. I think we just must embrace data and technology and innovation overall, right? Predictive analytics, data visualization. We must be aware of cybersecurity. We haven't really touched on it, but with data and technology and automation, cybersecurity becomes top of mind too. Data will help us to speak a common language. It will give us better insights into critical KPIs that we leverage in the industry. It will help us make better and more informed decisions, course correct faster, and ultimately become more responsive and adaptive to the seismic shifts that have yet to come in this industry.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.